All right, everyone, welcome back for another episode of Carnivore Trades. Today is Tuesday, June 7th, 2022. If you like the content, give the video a thumbs up, subscribe, comment. Come find me on carnivoretrades.com for swing trading alerts and analysis. By the way, I've got new coaching plans available as well, yearly coaching plan for 12 months. So come check that out if you're interested in that. Also, come check out the courses, only if you like beating the market by a massive amount. Otherwise, don't bother. Anyways, let's get into it here. So, Spiders up 88 basis points, Qs 89 basis points, and the Dow up 0.75%. Russell here leading the charge today, up 1.36. And yesterday we talked about this 50 MA. I said, we had a little kind of reaction off of it, but it is a minor moving average. If consolidated beneath it too much for it to really be major. And it's pushing through that right now in the final hour. So we got about 20 minutes to go, and nice little float here on very light volume. Notice the volume the last 2 days. I can't remember the last time I saw that much volatility yesterday with the volume that light. So very strange sessions going on here. This morning we had Target come out and basically say that, and a lot of economists that I follow have been talking about this, this will happen very shortly. There's about to be a massive inventory glut of consumer discretionary goods, so home fixtures and just anything that's non-essential, really. And so, if you're not struggling, I mean, now's your chance to get everything really cheap. But basically, the high cost of food and energy and the supply chain issues are causing these retailers, Costco. Let's take a look at Target here. So gapping down, coming off the lows, though. Same thing with Walmart and Costco. But these guys are, they're basically going to get squeezed because they're going to have to go off, on fire sale everything. So the market is looking at this and saying, well, let's talk about we'll talk about the bond market in a minute here. The point is, let's get through this first here. The point is, the market's gapped down on bad news, and they're now massively higher. So basically 1% higher. After a gap down. We tested this green bar low here. So I said to you guys yesterday, all I care about is this level. If this level holds, we're good. We tested it, and we're getting a nice reaction off of it. Triple Qs, same thing on the daily, basically testing that low. And, when you have a gap down on bad news, and you're able to rally well off the lows, and not just rally, but really close strong, that's usually a good sign moving forward. So the ABC kind of pattern that we've been talking about here, 1, 2, 3 up, is still in play, and it never was not in play. But up until recently, I've been more neutral here because we were supposed to break out here and we just didn't, and that kind of made it a little sketchy to my opinion. But I like this test here, and I think we got a good shot of moving up. So we'll give the market the benefit of the doubt for now. This is still just bullish inside bar, and nothing is really wrong. But again, nothing's guaranteed. Nothing's guaranteed in this market. We could easily just reverse it tomorrow. In fact, that would be really par for the course, honestly. But we'll see what we get. So VIX breaking through this low last week and now following through finally. So it looks like it may be headed to that 200 moving average. There's also that green trend line that you broke out of going all the way back to last year. Or excuse me, this is 2020. So June of 2020. So that's 2 years ago. Big trend line there we broke out. 200 moving average. There's also this blue trend line going back to November of last year, which is where we broke, or where the NASDAQ topped out, and obviously where the VIX bottomed. So maybe down in that 22, 23 area, probably get a good bounce on the VIX, but we confirm this move. That's probably where it's headed. You also have this green bar. This is where you really surged up. So that's where the money is typically going to be sitting. So that is going on there. Also, you have a 4-hour pattern here. Nice little bearish inside bar there on the 4-hour below the moving averages, and now pushing to the downside. So that's going to lift the equity markets. Again, this probably coincides with the light volume. The VIX getting killed. Volume is light. Generally bodes for an upside bias. You also have a bit of an inverse head and shoulders here. Actually, it's a pretty good one on the SPY. 10-minute. Again, it's a 10-minute pattern, so it has a higher degree of failure, but it's still there, and it's got a target of about 420. So nothing to say we can't get up there. And again, this 50 moving average as well is also minor. So we've done too much backing and filling underneath it for it to really be major. Now, these pivots up here will be major, but that doesn't mean we can't get up there. So we'll see what we get in the near term. Again, nothing's guaranteed. But the market's holding up okay. So we'll just take it one day at a time. Anyways, semis here. So again, gapping down just like everything else did, but now getting back above that 50 moving average, and again, still kind of keeping this bullish chop intact. IGV, which has been a little bit stronger relatively lately. Again, nice little, pop here, and then now inside of that and getting a bid here. So cloud software looks okay. ARC as well. So I like to follow ARC just as a barometer for risk. And so we had this up move, little consolidation, little pullback, and then a pop, and now we're kind of consolidating that again. So there's nothing to say these growth stocks can't push up and make one more leg up here. Another sector that has been absolutely roasted and has not been able to get out of its own way is biotech. XBI here, after that reversal yesterday, I said, wow, this thing is just a stinker. It can't even get any sort of bid. It gapped up, made new monthly highs, and then it rolled right over, and now reversing that again. So nice move. So maybe biotech is the next one to finally get a short squeeze here. So some of these beaten down plays are acting well. And again, like we said with the Russell, when the weak stocks, when the risk on stocks start to rally, that's usually a good leading indicator for some more upside. But this market, it's been tough. It's been treacherous, and it's really been a one day at a time type of market. We get a rally, and then we get a sell off. We get a rally, and then we get a sell off. And I've been saying to you guys lately, these sellers are very impatient, and that's why they got squeezed so hard this morning. They just chased this gap down, and they just didn't leave any firepower for the retrace to gap fill, and that's why they got their heads ripped off. And that's why I've been telling you guys, don't short down here. Short the resistance. If we go up here, I have no problem with you shorting, but don't short when we're just in no man's land, and that's going to cause a squeeze. Just like it did down here, people buying puts into the hole. What do you think the market makers are going to do? So that's essentially the nature of what we're looking at here. Anyways, Dow Transports. I like this test candle. I really do. This is very nice. So inside bar, little pop, and then a test down to the 20 moving average. Sold off really sharply this morning, and then immediately popped right back up in the first 20 minutes, and now closing green. So nice move there for the Dow Transports. I like that move. So this may have upside up to that 15,000 handle. So this is poised to get through this red bar now, consolidating beneath resistance, tells you the market wants to go higher. So nice move there for DJT. So interest rates. So this is what I was going to get into earlier. Basically, the markets. So you might say, oh, well, if there's supply chain issues, that's going to be, causing more inflation and so on, right? Food and energy just keep going up. But these companies like Target, they're saying, like, look, people are not going to be able to spend as much money on appliances and other things like that. So there's going to be inflation in food and energy, but disinflation in consumer discretionary. So it may actually bring inflation down to a degree. So rates are looking at that and saying, well, yeah, there may be inflation in certain sectors, but overall, all these other areas might be coming down as well. So that's why you're seeing rates pull back here. Basically, we talked about this gap fill and this kind of tail candle here. We went straight up into that and now pulling back. The TYX, again, we went into that red bar high, now getting rejected there. So we'll see if it comes back down again. If this does roll, you got that chance to put in that head and shoulder pattern. So, it's also coinciding with that little gap there, but we'll see what rates do here. But a little bit of a red day. We'd have to see follow through. They've been really resilient lately, but I still think there's a really good chance we get back to that 2.5, 2.4 area. Anyways, HYG, I told you guys yesterday, 77.50, 78 bucks. Good support, getting a bounce off of that right now. Up 20 basis points, hitting that 20 moving average. So we'll see if it can try to put in that higher low. If it does, that's a good sign for the market overall. Home builders here. Again, liking the drop in interest rates. And we're still really just, it's a weak sector, but a nice little inside bar pattern there on the XHB and the ITB as well. So, they're holding up, and I think they have near term, I would give them the upside bias to maybe this pivot here, 62, 62.50, maybe that 100 moving average if it really gets going. VNQ, same thing. I'm looking at around 102, maybe 103 now. That is a nice, good little consolidation pattern there. You got those that 50 and 100 just above, so that's going to be pretty stiff. All right, fins here, XLF. Again, same pattern, up move, sideways consolidation. You guys know the drill. XLF up 75 basis points here. And, was a little weak earlier on, wasn't really rallying with the rest of the market in the morning, but recovering in the afternoon. So nothing terrible there. XBD, broker dealer, same thing. little micro test candle, and now a rally off the lows. So nothing terrible with financials right now. Crude, a little bit on the weaker side. Well, I would say weaker side. It's green, but you know, you'd think that it would be moving a lot more with the kind of inflation news with, you know, food and energy and the supply chain, but it's basically, you know, sideways to up. You know, rates are down today. So again, disinflation in some goods and inflation in others. So maybe we're having a little bit of a correlation change here. So typically lately the trade has been rates up, crude up, or energy up, and that may be changing here. So if the market starts pricing in, you know, disinflation in other areas, we could see that dynamic change. Again, one day doesn't make a trend, but today that looks like that is what is happening. XLE making new 52-week highs here. So I said yesterday we're you know, probably getting close to some type of a blow-off move. This could be the start of it. So big surge there, already overbought, already extended. Please guys, do not chase these up here. You'll get a chance to buy energy at some point in the future, I promise. Wait for a correction or a crash first. Don't chase up here. You know, don't listen to the CNBC jerks that are telling you to buy. You'll get a chance to buy it up here. Just don't chase it. But, you know, I talked about that scenario where, you know, we could have a blow-off move in oil, and I still think it can get up to possibly 160 by next month. I know it's a long way away, but when commodities go parabolic, they go parabolic. So we'll see what we get out here. Nat gas, really just a quiet day, a little doji here. On the daily time frame, I still think that has a shot to get above $10. Dollar index here a little bit on the softer side, so rejected on that 20 moving average and that red bar high there. So you got still kind of bearish chop in here, so we're getting the pattern that we've been looking for. So a little bit more chop here, and the dollar will be able to get through 101, and then it's down to this area here, 99.50 or so, $100 somewhere in that range. Again, dollar looks like it's not that overbought right now, but it's still way extended from the 20-week moving average. So just remember those bigger time frames can show you a much different picture. Anyways, gold here, kind of a, you know, basically chopping action. I was hoping we would get a little bit more of a dip here, because I would like to buy it right at this area here around 1825 if we could get a test candle here. But in any case, it's holding up okay. If this continues to flag, it's got a good shot to move up to that 1900 handle, and the pattern's really nothing wrong with it right now. Silver holding up a little bit better here as well. So we had that little test last week, had another kind of test here, and it's holding up. It's holding sideways. So I'll give it the upside bias to 23 for now. SILJ did break that kind of formation the other day, so you got above these pivots, so that is holding up much better. So that is a good sign for silver. Platinum, little pullback here to the 100, nothing terrible going on. Palladium still very quiet, and copper, a nice pullback, and then finishing off the lows, reclaiming that 200 MA. So again, just a big surge, and now it's got to do some backing and filling here if it wants to move higher. All right, so Bitcoin here, this is very interesting. Just in the time that I started this video to now, Bitcoin has just really rallied here. But it has been all over the map. Here's the intraday. Yeah, look at that surge there on the 15-minute. So the last half hour, Bitcoin has moved $1,000. So a big move there for Bitcoin. And basically last night, this was in full-on barf mode. I mean, this was, you know, you guys, you know, I've been telling you, 29,295 spot 86. We closed below that, it's over. We got down to 29,227.30. And now we're reversing. So we had this potential kind of reversal candle yesterday, and then it looked like it tried to reverse to the downside overnight, and now we're reversing back up. So all over the map here, but it's got to get above this red bar high. If it can do that, Bitcoin can finally get a relief rally and get out of this choppy tight range here that it's been in for quite a while. So we'll continue to watch this. This one is very interesting to me. But again, that red bar high, so that's going to be 31,964 spot 09. So that's what we're looking at there. Don't worry about that 50 moving average. That is minor as well. Done way too much consolidation beneath it. Again, levels on the upside, you know, 34, 36,000. And we'll just kind of leave it at that for now. I don't know how much it can get through that. Now turning positive here. So a nice little move there for Bitcoin. Wild moves pretty much all week long. All right, anyways, back over to the spiders here. So let's see what we're doing here. Yep, getting a nice pop here into the close, 3:51 p.m. So market's about to close in 10 minutes, and nice follow through. We'll have to see more of it tomorrow because the market can dip down and they can reverse this. It would not surprise me. Again, like I said earlier, it would be par for the course to see a reversal. But volume is light. VIX is starting to break down. We'll give the markets the upside bias for an ABC up move, and we'll just leave it at that until proven otherwise. Anyways, guys, you guys take care. Come find me on carnivoretrades.com, and I will talk to you all tomorrow.